Hey everyone, this is Chris. Welcome back to the channel. So if you were watching markets yesterday, they were just flying. I haven't seen this crazy flying since 2020. That's what everything was saying, is like this is like the biggest rally in the last couple of years. It's kind of crazy how fast things move, and this is both to the upside and to the downside. We saw major crashes in FTX and cryptocurrency around the world, and one of the things that I am concerned about is how large will this contagion spread? How much money is in crypto and how many things are connected to it. So it was kind of funky how we had this like meltdown on one side in crypto, and then we had a sort of melt up on the other side. And so it kind of felt like, you know what, people were like, you know, I'm gonna just sell my crypto and I'm just gonna buy stocks, right? That's sort of how it felt like. One of the things I do think is happening though is that essentially people who are short the market, right? Short stocks mean they were betting that stocks were gonna go down. They covered their positions, they got out of their positions. That essentially means is like, you know what, I'm not shorting stock, I'm not betting that stocks can go down, but I gotta buy stuff back, right? I need to close out my position, close out my trade. And I think we had a lot of that going on. Essentially, this was driven by better than expected CPI data. So we went from like 8.3% CPI to 7.7, which is still high. The Fed is looking for a 2%, you know, that's their target. We're at 7.7. However, to be fair, core inflation, and this is without energy, without food, I believe is at 6.3. Remember, the Fed wants to get down to 2%. So we're still much higher than we want to be, because essentially we got to get inflation under control. The gist of it is that as long as prices keep going up and going up and going up and going up, it creates a lot of instability in the economy and a lot of instability for, honestly, regular people. And people at the lower levels of the income chain get hurt the most when inflation is high, and it just becomes, for an unhealthy society, it's hard to plan for a family, hard to plan for a business. It's hard for businesses to plan ahead to, you know, hire people and stuff like that. And I keep thinking, I keep saying to the same guys over and over again, I think unemployment is going to go up. I think crime is going to go up. And I think as unemployment goes up, people are going to lose their jobs, as we're seeing with many tech companies. And it'll be hard for them to plan for the future, right? And it'll be hard for them to make large purchases, because if you're concerned about your job and your money, you're not like going to go out and be buying cars and you know, refrigerators, washer and dryers, these kind of things. Now, one of the things I will say, as a trader, yes, you could have made a ton of money if you bought yesterday, you know, sold the day after, because markets were just flying. Now, as a long-term investor, you know, do you think Apple, say this for example, is going to be more in 10 years than it is today? Probably, right? There's certainly a good chance on that. And in some situations, right, some stocks that are profitable, blue chippers, they're probably going to be okay. But I personally think, my personal opinion, there's still a lot of downside ahead for many stocks. However, we are definitely not at the top. I always say that over and over again, because people always ask me, hey Chris, should I buy now? Should I sell now? What should I do? And I just say, we're not at the top. And you got to ultimately make that decision for yourself. And one of the best ways to protect yourself essentially is be diversified. So don't just be like, hey, I'm going to throw all my money into one thing. No, you say, you know what? I think some companies or stocks are attractive, and you have a belief in that particular investment. Go for it. That is your prerogative. But you know, my main advice is just don't throw all your money in one thing, because this is very difficult to read right now. I personally would be definitely taking all your money, anything risky like FTX, because they've been freezing assets. We talk about that a lot on this channel, but this has been the big story. And I am really concerned, like the FTX money, how widespread and how connected is that to other parts of the world and other parts of the market. Now, speaking of which, other parts of the world and other parts of the market, the UK, looks like their economy is a bit in shambles. I saw their GDP went down. That reading just came out. I think it was like down 0.2%. UK and China appears to be, I say appears to be, really beaten down. Can it go further? Yes, anything can happen in this market if we're expecting like crazy crash. The thing is, like, okay, let's say, for example, let's play devil's advocate here. Let's say, Chris, you know what, you're a complete idiot. Today was the bottom, or yesterday was the bottom, right? The question I'll ask you is, say, okay, if this was the bottom, how much upside do you expect, right? How much growth do you expect? Where's all the money going to come from? Where are companies going to improve their earnings? Because essentially, this is how stocks work, is they price in the future, right? So if you think X company is going to grow and X company is going to make more money in the future, you invest in that, right? The same way you invest in a house. If you think the house value is going to go up, you invest in that. And so the question I'm asking is, like, are things going to grow up like crazy? And this is sort of like, you know, maybe things will go up, but I need you to temper your expectations. And so that's sort of why I always say, guys, you know, best way to be successful in this market, because right now we're kind of in a trader's market, to be perfectly frank, because it's up and down, up and down, up and down. It's very hard to read, but the best way to really ensure your success is focus on your career. I talk about markets, I talk about news, I talk about all these kind of things with you guys, but I really want to emphasize, if you don't have a solid career and you're not working to build your career, build out your networking, build out your job skills, it doesn't matter how great you are at saving money and investing, you got to have money coming in, right? You got to be paying your daily bills. Because one of the things that's going on with stocks right now, and this is where it gets really tricky, if you say bought a bunch of stocks yesterday, like for example, and you sold them today, and one day you made 10% on your money or whatever, you don't actually get any money unless you sell that stock, hence / trader, the same way that people were closing out their positions that they were betting against stocks and then they close them out, save their day, and it caused stocks to go up, and they don't get any money unless they close out their trade. So that's why this market is so tough right now, because it's really designed for traders, and for long-term investors, it can be really, really frustrating, right? And I know a lot of channels and people on TV say, oh, just have a long-term perspective and you're going to be great. I don't think that's bad advice, but I really want to emphasize, guys, it doesn't apply to everything. It does not apply to everything, because the thing that where people get really hurt is essentially when they listen to another channel and they say, hey everyone, Dogecoin, look at Dogecoin. If you just buy and hold it for a long time, you're going to be great and you're going to make so much money. That's really, really bad advice, right? What you want to be in, you want to be in companies, if you're going to be in stocks, companies that are profitable, have decent cash, have good moats, right? You're going to be making money in the future. Also too, you want to be in industries where you think there's going to be growth. I myself think alternative energy is a great growth industry. I think so. I don't think that's a crazy thing to say. I still am bullish on cybersecurity because I see all this crazy stuff going on. I still think healthcare is probably pretty good. It's a pretty steady one, right? There's going to be opportunities out there. The things that I'm not so bullish on are things that are like in a recession where consumers don't have any money, they're not going to be sending things in, hence those customers won't be making a ton of money. Other news going on in the markets, I saw that China's sort of relaxing their COVID lockdowns a bit, so that's essentially why the Chinese market was jumping. So you have the UK going down a bit, so I haven't seen any recent news that says, hey, they're totally melting down, but China seems they're trying to be relaxing things. Also too, one thing that I saw was that I noticed there are many major media outlets are now talking about the Korean Legoland situation. We've talked about that before on this channel. So basically, Korea is having a credit meltdown, which is frankly really scary for us people here in Korea. Credit markets are frozen, and people are really, really worried. So now that the major news is picking up on that, keep an eye on that. So we have the Evergrande in China, right? So the whole real estate thing. Legoland in Korea, which is that. You also have the situation in England. Now, the war in Ukraine is interesting. It seems like the Russians are retreating. That's the news that I've been reading on that. So we'll see if that comes to an end. So this would be a positive thing for the market if you're looking for positives. If inflation is cooling off, right, and if the Russians are essentially going to end the war, that would be good for markets. However, inflation still remains very high. Also, too, housing prices are still up there, and companies still have to pay employees money because remember, companies we're essentially trying to get people to come back because unemployment's not quite high enough. They have to pay people more money, and that causes more expenses for companies. So even though, yes, we had a great day in the market, I'm not necessarily just changing my message day to day to day to day. I'm not going to do that. I'm just saying, you know what, stay diversified. If you're interested in things, do what you feel feels right. And the last thing too, I mentioned to you guys is I try my best to update you guys as best as I can. I hope you understand this is a very, very tough market. People keep saying it's one of the toughest markets to read in years, and I would agree with that because one of the things that is very, very clear on this, guys, inflation is still high. Even though it was better than expected, it's still high. And moreover, the Fed is quantitative tightening, not easy, meaning that we're not printing money anymore. And so for people who say lived through 08, 09, that was a period where they kept interest rates low to encourage growth. We're in a period where they're raising interest rates and inflation is still high, and so I just don't see tons and tons of upside. It doesn't mean you can't make money, you totally can. But just temper your expectations and focus on your career and sort of have a well-rounded approach to your finances. So hopefully this is helpful for you. We'll keep doing these talks day to day, and thanks for watching, and I'll catch you in the next video.